What's going on, everyone? D. Anthony here with Evolution Traders. Now we're going to go over today's price action using one of my strategies, and we're going to do some back testing because I believe the more you back test, whether you took the trades or you did not take the trades, it's always nice to kind of see potentially what you did wrong, potentially what you could fix, potentially maybe what you missed. Now, the room at Evolution Traders today, we had about 6 or 7 active guys trading. 98% of everyone today finished green. We did have somebody who finished in the red today, which is okay. They didn't blow themselves up. They didn't, lose their whole account or nothing like that. But again, what tends to happen with a lot of traders is those first moves off the bell. So if you notice this candle here, this big green move, this first move here, the second move here, and almost even maybe, the third move here is going to kind of trap you. Big ranges off the open, okay? Big ranges. So if you can kind of stay disciplined and maybe sit out, right? Put a rule for yourself where regardless if I get a setup or not, I'm not going to take any trades within 10 to 15 minutes after the market opens. I would definitely recommend that for anyone new to trading or someone who's looking to go from, unprofitable and now you're kind of scratching and clawing at the doors of being profitable. Just sit out 10-15 minutes, right? Again, there's no rush because the market's going to provide multiple opportunities in the day to catch something, but I want to kind of show you guys how potentially you could have gotten trapped or you could have gotten chopped up. A lot of traders will say 15 minutes after the market is open, the market's choppy. The market's choppy. It's like, guys, the market's been open for 2 whole minutes and we're already saying that the market's choppy. Is it choppy or did you just get into bad moves? Did you just jump the gun? Now, again, that's not to say that I never jump into moves. I never take losing trades. Of course not. I'm just like you. I'm not, I'm not a superhero, although I think that I am sometimes. I'm a normal guy. I'm a normal trader. I take losses. I'll cover something that I did today, took a loss on a trade, but all in all, let's get into it. 6:30 in the morning, we open and we close above the 20-day moving average. Now, the 20-day moving average on a 5-minute time frame. 20-day moving average is the white line, okay? You're going to notice some of these black lines here. This is just the VWAP. The VWAP is here. This is your upper VWAP band. This is your lower VWAP band, so forth and so forth. This trade here confirms, immediately stops you out, or not stops you out, but immediately puts you in a drawdown because you get into the trade. And I want to point something out to you guys as well, because I know a lot of you guys got chopped up and stopped out, but you really probably shouldn't have. So let's just kind of go through this narrative. Right off the bell, you get into the long position at 6:35 PST. It immediately pulls back. 6:40 pulls back some more, closes below the 20-period moving average. You probably stop yourself out. I don't want it to go down anymore. Then it closes, and then it confirms, or then it closes below the 20-day moving average. After breaking it, closes below. Now you're in more drawdown. And you probably stop yourself out because you don't want to get chopped up or you don't want to lose a bunch of money on the first trade of the day. Now, mind you, the first candle was a 45.5 point range. So you would have had to have taken, if you were going to play this strategy 100% perfect, you would have had to take a 45.5 point stop loss. Now you may be thinking to yourself, that's crazy. I would never give myself a 45 point stop loss. That's fine. Then don't take the trade. Look for another setup. But this strategy is calling for a 45.5 point stop loss. So how do we make that work? I trade mini contracts. There's no way I can take 40 points as a stop loss. I get it. I get it. I trade 4, 5, 6 contracts. There's no way I can take a 45 point stop loss. I get it. But if you played one contract is be about $80 to $90 loss. 2 contracts would be about $160 to $180 loss, $190 loss, under $200, let's call it, right? 2 micro contracts, MNQ, 2 micro contracts, 45.5 point stop loss, you're looking at an under $200 loss. Can you handle $200 loss? Can you handle that? I want you to ask yourself that question. Can you handle that? If the answer is yes, you should have never been stopped out of this trade. Because not only does it never break, right? Even if you put a hard stop loss under the reason why candle at 6:30, not only does it never break, which means it never stops you out, it never closes below. It stays inside of this lower VWAP channel. And then, yes, 5, 10, 15, 20, 25 minutes of absolute nonsense, up and down and up and down, the quote unquote chop, right? A lot of traders were ready to shut down their trading today out there because it was choppy. It was choppy for 25 minutes before this move absolutely started to explode. Gave you another 20 SMA play, gave you another one that did run, and you would have taken a full 1-to-1 on it at 51.5 points. We're not even going to talk about that one. We're just going to talk about the first one. Someone's going to tell me, well, what about the one at 650 PST that confirmed and did stop you out? I have two answers for you. Stopped you out, yes, for a 34.5 point loss if you set a hard stop below the reason why. If you use a close below the reason why, yes, you were in drawdown, but it never stopped you out. Food for thought. It does set up long once again, and it does go. But the first play for all you guys who are very antsy off the bell, you guys got into this play and got stopped out. But why? There was no reason why. Well, because I didn't want to lose anymore. I was down 20 points, 25 points. You didn't want to lose 40, 50 bucks. You didn't want to lose $100. Why did you stop yourself out? So let's start opening up the conversation. Why did you stop yourself out prematurely? Because there was no reason to get stopped out of the first 20 SMA play that opened up today. There was no reason. Were you in drawdown? Yes, I get it. Now, were you in drawdown to an amount that was going to be detrimental to your account? I don't know. How many contracts were you playing? If you're playing one mini contract, sure. If you're playing 8 micro contracts, maybe. If you're playing 5, I get it. It's scary. But if you're playing 1 or 2, especially this early off the bell, should not have stopped you out. You should not even have felt the pain. Down $100, $150, $200, that's nothing. That's chump change. You get it back on the next trade. You get it back on the next trading day. Let's continue to go with the narrative. If you don't want to participate in the first 10, 15, 20 minutes of the market, well, then notice how at 655 you do get a short setup that I could see people taking that does get stopped out. This trade would have stopped you out for a full 40 points. This short position. If you ignored this long position and you ignored this long position and you took this short position, yes, I get it. You got stopped out. But again, where are we at in the overall chart? The overall chart is still in the first active play. So even if there's other setups going on, you have to refer back to, you have to ask yourself the question, is there an active trade going on right now? I don't want to go against the active trade. I want to go in with the active trade. Now, the active trade was getting back in long. It was getting back in long. Now, there's going to be someone out there that's going to say, I did not take the first trade, but I took this long at 650 and it would have stopped me out. It would have stopped you out, yes, if you set a hard stop loss below your reason why. There's a very fine line. I believe that a lot of traders probably should set that hard stop loss below the reason why to protect themselves, because I feel that the majority of traders cannot self-control themselves. But if you're an adult and you have a little bit of self-control, I would just tell yourself, yeah, maybe I lose 34 points, maybe I lose 40 points if it closes below. I'm going to give myself always the close, guys, the close. So here's my reason why candle. It needs to close. Now look at this candle at 7 o'clock. Not only does it break the reason why at 46, but it actually comes all the way down to 44s. So you would have been in this trade for an additional 20 points worth of drawdown. I get it. That's a lot. That's close to 50 points of drawdown. But if you understand that the range was 34 points, I'm not going to go out there and play one mini contract or multiple mini contracts with the 34 point range. I'm going to play 1, 2, 3 max micros. So even 50 points is a $100 loss per micro. 2 micros is a $200 loss. It's not that much, guys. It's not that much, especially when you're targeting 30, 40, 50 points. So the first play, in fact, would have hit at a 1-to-1 on this move up for 45 points if you did not get scared and get shaken out. The second long setup did confirm for over 34 points if, okay, there's an asterisk on that, if your stop loss was a close below your reason why. Now, if your stop loss was just set hard underneath the reason why, you would have gotten stopped out. Okay. So you would have taken a 34-point loss. No harm, no foul. The next play that sets up, this long position here at 7 a.m. is a 50-point candle. 50-point candle. That's a lot of space. But in fact, if you trust the charts, would have hit for 50 points. Now, full disclosure, I did not take that trade. And I even told the people that were trading with me inside Evolution Traders, I didn't take the trade. One, I was trading options. I've said it before, I'll say it again. Options trading pays my bills, okay? It pays for this house that I live in, it pays my mortgage, it pays my car payments, it pays my insurance, it pays for the food that I eat, it pays for my random money that I keep throwing away at the golf course each and every single week. It pays for that, okay? So I have to focus on my options first. My futures trading will always be second to that. I look at the futures trading as a supplement of income. It's my side job. It's my second job. So I was not in a trade, although I wanted to be in the trade. I was also looking at this up move, this down move, this up move, this down move, and I psyched myself out of taking this trade. Because by the time this big 51.5-point candle presented itself, I told myself, if I take this trade and it comes back down 50 points, I'm going to immediately just lose 50 points. So I psyched myself out. I did not trust my strategy and trust my charts. So I sat on the sidelines. Is it any harm, any foul? No. Did I lose money? Lose out on making money? Sure. Is that the name of the game? Of course. But let's look at something here. Even if you sit out the first, 20, 30 minutes of the market, and really look for that first hour candle to close, you got this setup at 7 a.m. that confirms and gets over VWAP. So notice I'm using these VWAPs in correlation with my 20 SMA play here, because if this play sets up long, this play sets up short, this play sets up long, this play sets up short, this play sets up long, but I'm trapped between VWAP and the lower VWAP band, I'm telling myself I got a 20 SMA right in the middle. I've got a VWAP band here. I've got a lower band here. What's the best potential for me? Either a flush through the low of day that could potentially break the lower VWAP band, or when I close over VWAP, when I start to break VWAP, because it's an active 20 play. I know I've got this range here. Yes, it's a 50-point candle. Yes, I would be targeting 50 points, but I want to get into this trade once we break VWAP and we get a confirmation over this 20 SMA play here. That would have happened at 7:05. And guys, a 51-point candle did in fact hit. You would have made 50 points on this trade. That would be enough to shut it down for the day. Like absolutely shut it down for the day. You took 40 points, you took 50 points, you took 35 points, shut it down for the day. Even if you only played 2 contracts, you made somewhere between $100 and $200 on the day. Shut it down. Your day is done. We could just continue to go through the narrative here. We got a 20 SMA play here with a 34-point range that did in fact hit for 34 points. That's another 34 points that you could have taken. You got another one here that set up, don't skip the long. We got one that set up here for 10.5 points. You can see the high on this was 16,518. You can see this candle here was sitting at 16,529. This hit for 10.5 points as well. This is a winner here for 10 points. This was a winner here for 34 points. This was also another winner here for 17.5 points. This long never confirmed. This short here was 18.5 points. It did hit. This short setup here was 16.5 points. It did hit. This long position never confirmed. So again, the 20 SMA plays hit 1 trade, 2 trades, 3 trades, 4 trades, 5 trades, 6 trades. And if you really want to count the first one, 7 trades. The only one that didn't work was this long position and this short position. So out of 7 or 8 trades, 7 or 8 winners, 2 losers. So even if you did get stopped out here, whoops, I just completely screwed that chart up. Even if you did get stopped out there, okay, on one of these plays, you could have made it back here on this long setup. You could have made it back here on this long setup. You would have been profitable here. You would have been more profitable here. And then you would have really added to your P&L here. Trust the strategies. We are not smarter than the market. Even myself, by not taking this trade because I was anticipating that it was going to pull back again, costed me for making money. Okay. But in my defense, because I always like to have a defense for myself, and I always like to justify why I'm not doing something. is I was managing 2 positions on the options. I was managing an AMD trade that was requiring my attention to watch that chart. So I was zooming between AMD, I was zooming between Tesla, I was zooming between the NQ. Now, if I know that options pays for this life that I'm living, 80% of it, and about 20% of my income comes from futures trading, I need to spend a little bit more time with my main wife versus my girlfriend, right? So that's how I justify it for myself. I would have loved to have caught it. And I know a lot of traders and evolution traders, they caught this move and they were done. They were done. But again, I just wanted to give you guys a recap on the strategy, give you guys a recap on how I was thinking about the market today and what potential setups maybe you missed, what potential setups maybe you took part in, what potential setups maybe you mismanaged. Hope you guys enjoy that. If you want to trade with me each and every single day live, that link is down in the description box. Make sure to like, comment, and subscribe, and I'll catch you guys all later.